Welcome. In this video, did ZBCN coin break the downtrend? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. When we examine market movements, a clearly defined downtrend that had technically stood out and previously kept the price under pressure in a particular direction was quite prominent. This structure had long acted as a resistance line that the price struggled to break above. With every touch, it pushed the price back down and created significant psychological pressure on investors. However, it now appears that this is a thing of the past, as the price has successfully broken above this structure. This breakout is considered one of the key signals in technical analysis that a new phase may be beginning. The breakout of a downtrend to the upside not only indicates that the existing pressure has ended, but also signals a shift in market direction and the growing dominance of the buyer side. The first pullback following such breakouts, where the price retests the broken area, is particularly critical. If this retest is successful, and the price manages to hold without falling below the broken level, this is generally seen as the first step of a new upward wave. Indeed, the current scenario appears to be progressing in exactly this direction. After breaking a certain resistance level to the upside, the price made a short-term pullback and touched this level again, finding strong support and holding firm. This sends a clear message to investors. The market has now left behind the old downward trend and has started to adopt this level as a new base or support point. This technical development indicates an increase in upward potential. Particularly, the break of a downtrend followed by a healthy retest is very effective in gaining the confidence of investors who were previously indecisive. This scenario creates an opportunity for traders who had been waiting for a confirmation signal before entering positions. The levels where price consolidates again may lead to new buying pressure, potentially opening the door to a stronger and more sustained upward movement. In addition, the principle of every broken resistance becomes a new support is widely accepted in technical analysis. Looking at the current structure, we can clearly see this principle in action. The previously falling trend line that acted as resistance has now turned into support, and the price is gaining strength from this zone. This provides a strong foundation for the uptrend to become more pronounced in the near future. The fact that price is spending time in this zone and moving sideways after the breakout is also technically positive. Such movements indicate that profit-taking is occurring in the market, weak hands are being flushed out, and a solid base is being established. Once this consolidation process is complete, the likelihood of the price moving into an upward attack is high. Moreover, this movement could evolve not just into a short-term bounce, but into a rally that may have an impact across broader timeframes. Furthermore, if this breakout and retest process is supported not just on the price chart but also in volume indicators, the reliability of the scenario increases even more. If there was a noticeable increase in volume during the breakout, it indicates that the buying side was actively involved and the move was not artificial, but rather backed by strong participation. A decrease in volume during the slight pullback, followed by a rise in volume with the renewed upward move, is a classic technical indicator of a bullish scenario. When comparing this structure with past formations, we observe that similar scenarios have previously led to significant price increases. Especially after breakout retest formations, reaching targeted levels often reflects not only technical signals, but also investor psychology aligning in that direction. We can clearly say that the same sentiment is currently present, that there is a positive atmosphere in the market, and that buyers are gradually entering positions. But of course, we can't base our analysis on trends alone. Let's take a look at other metrics as well. Stay tuned. When we examine the market structure, a highly notable and promising formation stands out in terms of short-term wave movements. Especially from the perspective of Elliott wave theory, the current price actions appear quite healthy and structurally point to strong bullish potential. When we look at the previous wave structure, we can see that the second wave correction following the first wave has been successfully completed. This correction is typically a crucial phase for shaking out weak hands, taking profits, and allowing new buyers to gain strength. Now, the possibility that the price has moved beyond this correction phase and begun the third wave movement is a highly positive development from a technical analysis standpoint. According to Elliott wave theory, third waves are usually the most powerful, longest, and highest volume upward movements within the wave formations. In this phase, where the trend is most strongly felt in the market, investor confidence increases, momentum builds, and the price begins to move upward in a determined manner. The current chart structure supports this classic behavioral pattern. Being in the early stages of this third wave movement indicates a highly advantageous position for investors. Entering positions at this early stage of the wave allows for the potential return to be maximized. When we analyze the wave structure using the Fibonacci projection tool, some critical target levels emerge. These levels are not only theoretical targets, but have also proven themselves in the past as reliable reference points based on historical price movements. In particular, the third wave, often extending to 1.618 times the length of the first wave, is one of the most well-known and trusted projections in Elliott theory. This level is considered a primary target when buyer pressure continues and the trend remains strong. But it doesn't stop there. In some cases, this upward momentum can gain even more strength, and the third wave may extend up to approximately 2.272 times the length of the first wave. This indicates that the market is being supported more strongly than expected, and that the price continues to be driven upward. The current technical structure precisely supports this scenario. Especially when examining the volume profile, momentum indicators, and overall market structure, it is clearly visible that the price has the potential to reach both of these levels. A characteristic of third waves is that this is the phase where investors psychologically stop acting with skepticism and begin to participate heavily on the buying side. During this period, prices generally accelerate, continue to move upward with minor pullbacks, and most market participants adopt a positive outlook. The current market structure reflects this exact sentiment and psychology. This new movement following the second wave has laid a very strong foundation for the upward trend to continue and gain strength. Additionally, the internal structure of third waves is also a highly important detail in technical analysis. Often, even within this wave, there are 5 subwaves. This indicates that the price is not just experiencing a short-term spike, but is advancing by gaining strength at intervals. The possible third wave structure we are currently in may have already initiated its first subwave. Each of these subwaves can present new opportunities for investors. Especially during corrections, well-timed entries can lead to meaningful gains in a short period. RSI, or Relative Strength Index, is a very important technical analysis indicator that measures the momentum of price movements and helps traders identify overbought or oversold areas. Especially for trend-following traders, the trend lines on the RSI provide signals that are as important as the price action. Looking at the technical structure currently observed in the market, it is worth noting that there has been a long-standing falling trend line on the RSI indicator. This trend line had previously blocked the upward movement of the RSI level many times, showing a downward momentum every time the RSI touched this level. However, with the recent activity, the RSI indicator has finally broken through this long-standing falling trend line with an upside breakout. This breakout is a strong technical signal, far beyond being an ordinary movement. This is because trend breakouts on the RSI often precede price action, and this breakout tells us that the price is preparing for a similar change in direction in the near future. In this context, the RSI's break above this important resistance indicates that the underlying potential energy is now being released and a strong buying pressure is starting to take shape in the market. RSI and price have both broken trends, and the uptrend may be imminent. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.